Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. And I have to be honest with you, looking at this stack of reports on my desk, I feel like I'm looking at an optical illusion.
Oh, one of those.
Yeah. You know the ones where it's a duck if you look at it one way and then a rabbit if you look at it another?
I know exactly the kind. You blink and the whole picture it changes completely.
That is the crypto market right now. Because, if you look at the raw price, we are partying. The global market cap is over $3.6 trillion.
Right.
Bitcoin is what? Hovering around 87,000. Ethereum sitting comfortably over 3,000. By any traditional metric, we are in a massive bull run. The charts are green.
On paper, yeah. It looks like the up-only phase. Everyone should be celebrating.
But this is the duck-rabbit switch. If you look at the sentiment, specifically the fear and greed index, it is flashing a score of 29.
Extreme fear.
Extreme fear. It's a fascinating disconnect, isn't it?
Usually, price and sentiment move in lockstep.
It just makes no sense. Usually when Bitcoin is near an all-time high, people are euphoric. They're, picking out colors for their Lamborghinis.
Right.
To see the market this rich, yet this terrified, it implies something is broken somewhere.
All right.
So our mission today is to figure out why everyone's at the party, but they're all standing right next to the emergency exit.
That's a great way to frame it.
We have a heavy stack to get through to explain this.
Yeah.
The schizophrenia. We're going to look at some conflicting flow data ETFs versus stablecoins. We're going to look at how governments are reacting from a tax bill in Rhode Island all the way over to the London Stock Exchange. And we are going to get into a surprisingly heated debate about the plumbing of the system specifically, whether Ripple is even a blockchain at all.
Oh, that last one is definitely going to ruffle some feathers. But it's a distinction that really, really matters for the future of banking.
Absolutely. But let's start with the market pulse. Help me make sense of this fear score. Is it just a glitch in the algorithm, or is there something real happening?
I don't think it's a glitch, no. I think it's a rational reaction to a very specific type of data. See, the Fear and Greed Index isn't just about price.
Right.
It looks at volatility, social media, and crucially, market momentum. And right now, we are seeing this massive divergence in who is buying and who is selling.
Is this the classic smart money versus dumb money dynamic, or is it more nuanced than that?
In a way, yes. Look at the ETFs, the exchange-traded funds. These are the vehicles for institutional capital.
Well,
Wall Street, the big money.
okay.
In the last 24 hours alone, we saw $143.3 million in outflows.
So wait a minute. Bitcoin's at 87 grand. The market is up almost 2% globally.
Yeah.
And the institutions are pulling cash out.
Exactly. When the price goes up but institutional volume goes down or actually reverses into selling, that signals a lack of convention at these levels. They're taking chips off the table.
They're de-risking.
They're de-risking. And that makes the average trader nervous. They think, what does BlackRock know that I don't? Why are they leaving the room?
Right. It feels like the music just stopped for a second. But then I look at the other side of the ledger in our notes.
Yeah.
And the stablecoin numbers are going bananas.
Right. And that is the counter narrative. This is where the plot really thickens.
Okay, so just for the listener who might be new to the mechanics here, when we see high volume in stablecoins like Tether or USDC, what does that actually tell us? Because stablecoins are boring.
Right.
They just sit at $1.
They are boring, but their movement tells you everything about intent. Stablecoins are, they're pegged to a fiat currency, usually the US dollar. Traders use them as a parking spot.
A waiting room.
If you sell your Bitcoin, you often sell it into Tether, not straight back to your bank account. It's the waiting room inside the casino.
Got it.
Precisely. And right now, the volume on Tether USDT has crossed $100 billion. USDC is doing over $14 billion. That is an enormous amount of liquidity just sitting there.
So if I'm interpreting this right, the fear isn't that people are leaving crypto entirely. If they were leaving, that money would be moving back to Bank of America or Chase.
You'd see the total market cap drop significantly. They're not leaving.
So they're staying in the casino, but they've cashed out their chips, and they're standing by the roulette wheel, waiting. For what?
Waiting for clarity. It's what we call dry powder. It's cash on the sidelines preparing to buy the dip. So you have this tension. Institutions are selling, retail is moving to cash, but nobody is actually leaving. Everyone is coiled tight, and that tension, that uncertainty of which way does it break, that's what creates that fear score of 29.
It's like hikers waiting at base camp. The weather looks bad, so they aren't climbing, but they haven't packed up the tents yet either.
Exactly. And the longer they wait, the more anxious everyone gets. That's the mood.
Speaking of waiting for things to clear up, let's talk regulation. Because usually, regulatory uncertainty is the main driver of fear, and we're seeing two very different approaches popping up. One is very grassroots here in the U.S., and one is very institutional over in the U.K. Let's start closer to home. Rhode Island.
The ocean state, not usually the first place you look for crypto innovation.
No, usually it's Wyoming or Florida making headlines. But there's a bill here by a Republican Senator, Roger Picard. And at first glance, I have to admit, it looks like just another let's form a committee bill.
It does start that way. The headline is, they're creating a 5-member commission to study blockchain, NFTs, crypto laws, reporting deadlines set for January 2028.
Which is just hilarious to me. January 2028? In crypto time, that's like a century from now.
It's an eternity.
By 2028, we might be paying for coffee with our retinas.
Bureaucracy moves at the speed of paper. Crypto moves at the speed of light. But you can't just dismiss the bill because of the timeline. There's a specific provision in there, a real nugget, that is actually pretty revolutionary if it catches on.
You're talking about the tax exemption.
Yes. The bill pushes to exempt small business transactions from state taxes.
Okay, let's drill into why that matters.
Yeah.
Because to a normal person, tax exemption just sounds boring. But for crypto users, this is the holy grail, isn't it?
It's the biggest friction point. Think about how it works right now. If you go buy a coffee for $5 using Bitcoin, and you bought that Bitcoin 3 years ago and it was cheaper, technically you have just triggered a taxable event.
So I have to calculate the capital gains on a latte.
Exactly. You technically owe the government a percentage of the profit you made on that $5 worth of Bitcoin. It is a bookkeeping nightmare.
Right.
It makes using crypto as an actual currency for buying bagels or gas completely impractical. Nobody wants to track basis points on a donut.
So Rhode Island's basically saying, look, if it's a small transaction, we're not going to chase you for the pennies.
They are trying to normalize the velocity of money. They want to see if removing that tax friction actually encourages people to use it.
Which is a perfect segue, because while Rhode Island is trying to help you buy a coffee without a spreadsheet, London is trying to help you buy a complex yield-bearing financial instrument.
Yes, the London Stock Exchange news, a very different flavor of adoption.
This involves a company called Valor, and they got approval from the FCA, the UK's Financial Conduct Authority.
And the FCA is notoriously tough. They've been very, very restrictive, so this is a big deal.
What are they approving?
They've approved Valor to list crypto exchange-traded products, ETPs, right on the main London Stock Exchange for retail investors.
Retail, okay.
But it's not just a vanilla Bitcoin tracker. These are physically backed products that include staking rewards.
Okay, hold on. We got to unpack that a bit. Staking rewards.
Yeah.
For someone who just buys Bitcoin on an app, what does that even mean? How is that different from just holding the coin?
Think of it like a dividend stock. If you own a share of Apple, you hope the price goes up. But if Apple pays a dividend, you also get a check every quarter just for holding it.
Right. It's passive income.
Staking is similar.
Yeah.
In networks like Ethereum, you can lock up your coins to help secure the network. And in exchange for doing that, the network pays you a yield interest, essentially.
But that's usually complicated, right? You have to run a node or manage keys.
Exactly. It's technical and risky if you don't know what you're doing. What London is allowing here is a product that does all that back-end work for you. You just buy the ETP on the stock exchange, and the value of your investment goes up based on the price of Ethereum plus the staking yield it accumulates.
That is a sophisticated product. It sounds like something only hedge funds usually get.
It is, and it highlights the UK strategy. They are gatekeepers. They say no to almost everything, but when they finally say yes, they allow for these high-quality, regulated, complex products.
It's a stark contrast to a place like Japan, right? We've talked about them before.
Completely different philosophy. Japan is all about education and broad licensing. They want everyone to understand the risks. The UK tries to sanitize the product before it even reaches the shelf.
So we have the US struggling with basic tax rules to buy a bagel, and the UK building complex yield-bearing instruments. The infrastructure is being built.
The pipes are being laid, regardless of the fear index.
Speaking of pipes and infrastructure, let's talk about what people are actually buying. Because in times of fear, the classics tend to make a comeback. And you can't get more classic than gold.
Gold is having a massive moment in 2026. The physical stuff is through the roof, according to these reports. But what's interesting for us is where gold meets the blockchain.
We're looking at Tether Gold, ticker XAUT.
XAUT. It's a stable coin, but instead of being pegged to $1, it's pegged to 1 troy ounce of gold. It has a market cap over $4 billion now. Controls 60% of the entire gold-backed stablecoin market.
Okay, but I have to play devil's advocate here.
Please do.
If I want gold, why don't I just, buy a bar and stick it in a safe?
Yeah.
Or buy the GLD ETF? Why do I need it on a blockchain?
That's the perfect question, actually. The backyard method is great until you need to send that gold to someone in Tokyo in 5 minutes. You can't.
True. It's heavy and slow.
And the ETF is great,
Yeah.
but it only trades during stock market hours. If a war breaks out on a Saturday, you can't sell your GLD. Tether Gold trades 247-365. And crucially, it's fungible. You can send $50 worth of gold or $5 million instantly.
And it's actually backed. This isn't just paper gold.
They claim it is backed 1-to-1 by physical gold in Swiss vaults. And because it's on the blockchain, there's a level of transparency there you don't always get.
So it's the ultimate hedge for 2026. You get the safety of a Swiss vault with the speed of an email.
It represents a convergence. We often talk about crypto replacing traditional finance, but here we see it enhancing the oldest asset in the world.
But not everyone is playing it safe with gold. Some people still want speed. We also saw a new ETF launch for Avalanche.
The VAVX. This is for the risk-on crowd.
VanEck is launching this, and they're being aggressive about it, waiving fees until the end of February.
It's a classic customer acquisition play. They want to suck up capital quickly, but it validates a specific thesis. Avalanche isn't trying to be digital gold. It's infrastructure, a high-performance blockchain designed for scalability.
This is the chain that Citi and FIFA have been experimenting with, right?
Correct. If you believe that in the future, the actual stock market will run on a blockchain, you need something much faster than Bitcoin. You need sub-second finality. That's Avalanche's whole pitch.
So we have the safety trade with Tether Gold and the speed trade with Avalanche. Which brings us perfectly to a region that is betting the house on both finance and speed, the Middle East.
Oh, the activity in Saudi Arabia and the UAE right now is just, it's blistering. They are not waiting around for U.S. regulations to catch up.
So let's look at this partnership in Saudi Arabia.
Yeah.
We have Ripple, the company behind XRP, partnering with GIL, which is the innovation arm of Riyadh Bank.
That's right. And you have to see this through the lens of their Vision 2030. Saudi Arabia is actively trying to diversify their economy away from oil. They want to be a global financial hub.
And this partnership focuses on remittances.
Remittances and digital custody, moving money across borders.
Which makes perfect sense for Ripple. That has always been their sales pitch. We are Swift, but better.
Swift 2.0. Faster, cheaper, transparent settlement.
But here is where I want to pause and dive deep. Because we got a really interesting listener comment about this. And looking at the sources, there's a technical debate here that I think most people miss.
Okay.
When we talk about Ripple partnering with a bank, we say they are using the blockchain.
Right. That's the standard headline.
But are they?
Yeah.
Is Ripple actually a blockchain?
Hey! Okay, you're really opening a can of worms with that one.
Good. Let's open it. I mean, the words matter. Right.
They do. And look, if you ask a Bitcoin purist, the answer is a hard no. Absolutely not.
Why not? It has a ledger, it has coins. What's the difference?
It comes down to the definition. A traditional blockchain, like Bitcoin, consists of blocks of data chained together, and it relies on proof of work. You have miners all over the world expending electricity to solve a puzzle. That competition is what secures the network. It's trustless.
Okay. And Ripple?
Ripple's XRP ledger doesn't have miners. It doesn't have blocks in that same sense. It uses a consensus protocol. Imagine a room of trusted accountants, the validators. They all look at the ledger and vote. Do we agree this happened? Yes, yes, yes. Okay, it's confirmed.
So instead of a global math competition, it's a board meeting.
A very fast, automated board meeting. They use something called a unique node list, a list of validators they trust not to lie.
So it requires trust.
It requires some trust in those validators, yes. And that is the trade-off. By getting rid of mining, Ripple becomes incredibly fast and cheap. It can handle thousands of transactions a second. But it is not as decentralized as Bitcoin.
Not as censorship resistant.
Not at all. It is much easier to pressure a known list of validators than it is to pressure a million anonymous miners scattered across the globe.
That is such a key distinction. We use the word crypto for both. But one is a digital fortress for the individual, and the other is high-speed rail for the banks.
Precisely. It's enterprise software versus sound money. And the Ripple network can technically function for messaging and payments without even using the XRP coin itself.
So Riyadh Bank wants the high-speed rail. They don't care about the philosophical purity of it all.
They care about efficiency, and that's what Ripple sells.
Now, speaking of selling the future, just a quick hop over to Abu Dhabi, we saw a partnership between the Abu Dhabi School of Management and a company called Sal.ai.
This ties back into that sovereign theme.
The phrase sovereign AI was in the report. What does that mean in this context?
In 2026, nations have realized that AI models are strategic assets. If you're using ChatGPT, you're using an American model, trained on American data with American biases.
And if you're the UAE, you might not want your national infrastructure running on a server in California.
Exactly. Sovereign AI means owning the compute, owning the model, and owning the data within your own borders. This partnership is about training the future leaders of Abu Dhabi to build and manage that infrastructure.
It really feels like the Middle East is just skipping a step. They aren't trying to catch up to the legacy system. They're leapfrogging straight to DLT and AI.
That is the explicit goal. They have the capital, and they don't have the same level of bureaucratic legacy debt we have in the West.
So let's bring it all back down to earth. We've covered a lot. But I want to circle back to that Rhode Island bill and the question of actually using crypto. We had a listener question pop up that I think just nails the dilemma.
Let's hear it.
The listener asks, will exempting small Bitcoin transactions from taxes actually make me spend my Bitcoin?
It's the million-dollar question, isn't it?
What's your gut check?
My honest answer, probably not.
Because of the HODL mentality.
It's Gresham's law.
Remind us what that is.
Gresham's law is an economic principle that says bad money drives out good. Basically, if you have two currencies in your pocket and one is losing value like the dollar due to inflation and the other is gaining value like Bitcoin, which one are you going to give to the barista?
I'm getting rid of the melting ice cube. I'm spending the dollar. I'm keeping the gold.
Exactly. You don't buy a sandwich with a gold bar, even if the government says it's tax-free. You hoard the good money. And Bitcoin has firmly established itself as that store of value.
So does that mean crypto payments are a dead end? Is the Rhode Island bill useless?
Not useless, but it might apply more to stablecoins. People will spend USDC if it's tax-free.
Okay.
But for Bitcoin to be used as payment, we need a technical shift, not just a tax shift. We need the Lightning Network.
The layer twos.
Yes.
Yeah.
If we want Bitcoin to be a payment rail, it happens there. The Lightning Network allows for instant, virtually free transactions without clogging up the main Bitcoin blockchain. It's like keeping a tab open at a bar.
That's a great analogy.
You don't write a transaction to the main chain for every sip. You just settle the tab at the end of the night.
So the main chain is bank settlement, and Lightning is the bar tab.
And until Lightning is seamless and invisible, the tax laws won't matter as much. But you need the laws in place before the tech takes over.
Paving the road before the cars arrive.
Exactly.
Okay, so let's try to tie this all together. We started with this fear, right? This score of 29. What's the final takeaway for someone looking at that number and feeling, a little spooked?
I think the synthesis is that we are in a transition phase. The price pumped, and now the market is just catching its breath. But you have to look at what's happening under the surface.
The build.
The build. Institutions are creating yield-bearing ETPs in London. States are fixing tax codes. Nations are building sovereign AI and high-speed payment rails. The infrastructure is being poured.
So the fear is short-term sentiment, but the reality is long-term construction.
That's it. The traders are looking at the one-hour candle. The builders are looking at the 10-year horizon.
I want to leave the listener with a thought today, specifically thinking about that Ripple versus Bitcoin distinction we made. We tend to lump everything under this big umbrella of crypto.
We do.
But if Ripple prioritizes speed and works with the banks, and Bitcoin prioritizes security and works for the individual, are we actually moving toward a world where blockchain isn't one revolution, but two? Two completely different internets of money running in parallel.
One for the institutions and one for the people.
Exactly. A private internet of money and a public one. And the real question isn't which one is better. The real question is, in 5 years, when you walk into that coffee shop in Rhode Island, which one will the register actually accept?
That is the battle for the next decade.
Thanks for diving in with us. We'll see you next time.